Hello people, welcome to the Fortune Fastlane YouTube channel. Charlie Munger, a billionaire investor and partner of Warren Buffett, has made many controversial remarks about both fiat, currencies, and crypto assets. With the current economic turbulence, Munger has predicted that fiat currency is going to zero within the next 100 years. If you want to know more of this content, subscribe to the Fortune Fastlane YouTube channel and hit the notification bell. Veteran investor Jim Rogers made the comments in an interview with Yahoo Finance, which was picked up by Michael Saylor on Feb 17th and retweeted by MicroStrategy's CEO. In his analysis, Mr. Saylor said that instead of fiat currencies, if Bitcoin fails, then there is a solution in Bitcoin. Like many intelligent investors, he understands the problem but is unaware that we have engineered a solution in the form of Bitcoin. Munger stated in a Yahoo Finance interview, "The safe assumption for an investor is that over the next 100 years, the currency is going to zero." US dollars were backed by gold up until 1971. While this is partly due to its history, gold has properties that make it suitable as a currency. Gold is rare and durable, but also transferable. With high dividend stocks, you can earn more money in the long run. However, with exponentially increasing inflation, that advantage becomes minimal over time. There is a lag in previous inflation rates, combined with the speed that information can be spread, and it is hard to predict what will happen in the future. It is unlikely for more real growth and development to dig us out of this debt problem. Are we going to stagnate for a century working painfully through this debt and unfunded promise piles? It seems as if we may cloud our judgment and lie to ourselves, then when it becomes politically unpalatable, we will rip the band-aid in an accident. Munger did not name the dollar specifically, but it was pretty clear what he meant. Inflation in the US is currently at a 4-decade high of 7.5%, and costs continue to rise significantly with no end inside as money is printed and the supply is diluted by central banks. MicroStrategy CEO Michael Saylor called it a big endorsement for Bitcoin because Warren Buffett's partner Charlie Munger said no. According to Reuters, Munger claims to be proud of the fact that he hasn't gotten caught up in the venereal disease of crypto. Munger continued, "I just regard it as beneath contempt. Some people think it's modernity and they welcome a currency that is so useful in extortions and kidnappings and so on, tax evasion." He remarked that the financial structure of money today is a waste because it is used for doing things like extortion, kidnapping, and tax evasion. In 1971, the United States switched to a fiat currency. With the money that is backed by governments, the currency's value is only as strong as the government's credibility. The government is able to control value by decreasing or increasing the money supply. When inflation is constant, having more money supply can help an economy grow. It is possible that with a 4-month hyperinflationary scenario, the working theory of 50-year financial trader Victor Sperandeo can be considered a more sound financial foundation. Central bank digital currencies are inbound to over 90% of the world's global domestic product-producing nations. Centralized high-volume payment gateways will provide governments with opportunities to collect data and adjust countries' monetary policy structures. Central bank digital currency systems will likely be useful in helping control massive inflationary policies and might get increasingly whittled out by anonymous payment systems. Robert Munger said that creating new types of currencies is crazy and that everybody has to do it himself. Munger added, "I wish it had been banned immediately. I admire the Chinese for banning it. I think they were right and we, the United States, were wrong to allow it." Munger is a partner alongside Warren Buffett at Berkshire Hathaway. The company released a quarterly report outlining the huge $1 billion purchase of shares in Nubank, Spain's online bank that has been courting controversy in more than one way. Nubank is a Brazilian digital neobank that operates outside the realm of traditional finance, and customers can invest in crypto-related products. However, as more money is put into the market, that money becomes worthless. In simple terms, if there is more money, you can buy less with that money. This is called inflation. There is a decline of purchasing power in the past 100 years. In 1913, a dollar could purchase 30 chocolate bars. Today, McDonald's coffee costs $1. Wage increases have outpaced inflation. This means that despite increased inflation, purchasing power has still gone up. However, real wages have been decreasing since 1971. According to James Anderson, at James Henry and on Twitter, poor policies and further control grabs will drive bullion demand higher still. For the last 9 months, the gold spot price has enjoyed the best weekly rise in the last 9 months, closing just under $1,900 for the week. Silver spot price is also slightly higher, though it has not followed gold strength as much as expected. In June of 2021, when gold prices were near $1,900 an ounce and silver prices were above $28 an ounce, the gold-silver ratio was around 6 to 7 and the silver spot price was at $275. Regardless of what the aging billionaires think of crypto, smart money is still going into it at this point. If gold keeps advancing, it will be interesting to see how the price of silver reacts. Recently, we got some updates on underlying physical bullion import-export data for last month, January 2022. Swiss gold exports to China last month were the largest seen since last 2016, when then the gold spot price dipped below $1,200 per ounce. This year, the Chinese have been buying around 10,000 ounces of gold every day. Silver bullion is a commodity that has been around for centuries, yet has recently seen a resurgence. According to Metals Focus and India trade data, the nation had a strong month of January 2022 for silver imports. They imported around 777 metric tons of silver, or roughly 25 million ounces in 1 month alone. The chart you see in this week's video is only updated through November 2021, but you can see where 777 tons stacks up compared to the last 10 years of data. And this trend is expected to be seen in the future. In the large quantities of silver imports what was seen in past years, India received over 172 million ounces on average per year during the 2010s. And the country imports less than half that on average over the last 2 wedding seasons of 2020 and 2021. It is fair to say that there is a pent-up silver demand in India, which can be expected from robust Indian silver bullion import data coming. Gold bull spirits were high this week after seeing the Chinese yuan gold price reach new all-time highs beyond $24,000 per troy ounce of gold. There's been a sustained breakout in the Japanese yen gold price above. The blue lines represent gold, while the red lines represent silver in the $5 chart. The trend has been massive uptrends and dipping the past few days. What is fascinating for me is how much further silver has to go in Japanese yen before getting anywhere near its 1980 high still. The land of the rising sun needs to see its current silver spot price multiply by over a factor of 4 just to reach an over 40-year-ago high from January 1980. According to a recent survey taken by Gallup, approximately 80% of US citizens believe that inflation is currently increasing and will continue to do so. Although inflation typically happens during periods of monetary expansion, the risk in this case is a runaway psychological exception hard to bring back without crashing financial markets and kicking off a recession. Here is a chart illustrating US government BLS inflation statistics from December 2016 through December 2017. As you can see, offshoring and increased productivity can mask some of the escalating costs in the last 21 years, but the largest price hikes have been with the things that US citizens absolutely need. On a relative basis, bullion prices are still affordable and there is an abundance of wealth insurance options available. Wages and savings are 2 parts of the equation. Imagine you're coming up to retirement and save $40,000 throughout your working life. The $40,000 you have in 20 years will be equivalent to around $26,000 today. The inflation is now at 7.5%. At this rate, in 100 years, $1 million will diminish to merely $445. This is not good if you plan to pass on part of your wealth to your grandchildren. That's it for this video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work you put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!